many of you have had a day where you start the day green, you make a little bit of profit, and then you finish the day in the red? I think it's better just to go red and have never been green at all than to go from green to red, because going from green to red is such an emotional trigger. It's like I had something, and then because I'm an idiot, I gave it back and it's gone. So today is a perfect opportunity for me to demonstrate the line in the sand that I'm drawing of when to walk away, because ultimately you need to have a system that you're going to follow consistently. If you walk away too soon chronically, you're leaving a lot of money on the table. If you overstay your welcome chronically, you're going to be giving back profit. So where do you draw the line and how do you approach this? Number one, it starts with being consistent about a set of rules. And number two, having the discipline to follow them. And this is a really big one for me that you're going to see in my trading today, because I'm also going to compare it to a week ago from today. Because a week ago from today, I did the exact same thing, except at this fork in the road where I sit right now. Last week, I did something different. I kept trading. And I ended up having a swing in my P&L from $10,000 in the green. I gave back $17,000 and went into the red. That's a big P&L swing. Today, I got myself up $11,000 and have given back half. This is my moment where I'm at a fork in the road and I have to make a choice. And I'm going to walk you through how I've come to sort of handle these moments. Honestly, I make mistakes sometimes, like I did last week, but I'm going to talk about that in today's episode to help you better understand how to exercise and develop a little bit more discipline and hopefully a set of guardrails in your own trading. So let's go ahead, get on the screen share, and jump right in. In order to be a consistently profitable day trader, you need to have a system. It's a set of rules that you follow that dictate the type of stocks you buy, right? So we've got it right here. These are the types of stocks that we're going to trade. We could talk about this more in this episode. That dictates where you get in, where you get out, and when you walk away. So today, by the definition, I would say that I'm a pretty successful day trader. I've got $5,669.27 in profit, but it would be very easy to look at the glass half empty, because I had a full glass at one point on the day. I was up $11,000 and that sure felt good. So how does the $5,600 feel in comparison? Now remember, this is all relative. You could be talking about numbers that are twice as big as mine. You could be talking about numbers that are a tenth as big as mine. This could be the difference between being up $100 on the day and being up 50. The number isn't what matters here. It's the decision-making process that you utilize to tell you when to keep going and when to walk away. So on Friday, I met with Ted, who runs the trading psychology program here at Warrior, and I told him about my epic mistake on Tuesday. You know, he's like, all right, walk me through it. What happened? And this is my technique for dealing with big losses myself. When I have a big loss and I make a mistake, I need to separate myself from the computer. I need to get away. I need to sort of process it. And usually I'm trying to figure out, where did things go off the rails? You know, where did I make a mistake? So for you, if you had a day where you were green and then all of a sudden you're at the worst red day of your career, you've got to go back and unpack it, figure out where you made mistakes and were there points where you coulda, woulda, shoulda intervened sooner so that loss can become a lesson. And for me, the fact is, and you guys, I'm sure many of you will deal with this yourself, you'll have days where you know what you should do, but for some reason, you don't have the willpower to do it, to follow through with it. And so you end up falling victim to FOMO, giving into that impulse to keep trading. And so ultimately, it's great to have a set of rules, but you need to be able to follow them. So on the day last week, I could show you my P&L base. Basically, I'll show you kind of a line of what it looked like. I very quickly on the day last week, this is my zero line. So I went up about $10,000 with like 2 trades. And then in one trade, I lost $2,000. And in the second trade, I lost another like 2,500. So I'd given back about half. And then I took a big trade at the open and I lost like $7,000. And that put me in the red. From there, I didn't trade for a while. And then I decided to come back later. I took a risky trade, got myself to up like $10. went right back to down the same amount, took another trade, went down even further, and then took a Hail Mary pass and got myself back up to right here. This whole day was a disaster. And if you look at it like this, you could probably see very clearly that there was a spot where I should have walked away. Perhaps it was right here. Perhaps it was right there. Certainly it should have been right here. I should not have taken any of these trades here. Even though I did end up recouping some loss, this is almost the worst thing that can happen because you're getting a positive reinforcement for a bad behavior, a bad habit. If nothing good ever came from breaking your rules, then you would definitely never break them. But sometimes you have a rule that says, I'm not going to keep trading past this time of day. You do it anyways, and you make a bunch of money. And now you're like, oh, well, I guess sometimes it's okay to not follow that rule. See, that's a problem. So back here, I, for a long time, had a general rule of thumb that if I give back 50% of my profit on the day, 50% of my profit, I walk away. Now, I don't follow this if, I go up like, $150 and then give back 75. I really only follow this if I've exceeded my daily goal, which is $5,000. All right. So anything over 5,000, I'll say, all right, if I give back half, I've got to walk away. And I'm doing that. This is a rule, right? This is a rule that I follow. I should follow. I have the rule. I don't always follow it, as you can see, but this is a rule that helps prevent these types of days, because what I actually did was I studied a tremendous amount of my own trading data. And you know what I found? I found that on days when I took an initial loss and I went red, but kept trading, on average, I doubled my loss on the day. So that's a statistic from my actual metrics that the day, so this was an exception. Usually what would happen is I actually finished down here, down 7,000, and from down 2,000, it's an extra $5,000 in loss that was completely avoidable if, at the very least, I had walked away after going from green to red. However, if I could walk away right here, that's even better. And so when I was talking with Ted, he said, when you were up 10,000, why didn't you just stop there? And I said, well, the reason I wouldn't do that is because then I'll never have a day where I'm up 15 or 20,000. Why would I want to cap my winners? And certainly on a day where I'm up 5 or 10,000 in the first hour of trading, clearly the market's hot. Isn't this most certainly the time to dig deep? So in that book by Annie Duke called Quit, she talks about this story of taxi drivers in New York City. And she shares that taxi drivers tend to work until they've made a certain amount of money. And on a bad day, they'll work a full 12-hour shift. And on a good day, they'll just work for like 3 hours and then they're done for the rest of the shift. And she calculated that, in fact, if they worked more on the days when the fares were coming in, they would make exponentially more money, even if it meant on the days it was slow, they stopped before they hit their goal. That is like, for me, it was a real sort of mind expansion. I was like, whoa. So what about with trading? On days when it's hot, I should put the pedal to the metal and be aggressive. And on days when it's cold, maybe I should stop trying so hard. All right. So I think it's important to try to extend your winners as much as you can on a day when the market's hot. And so the general rule of thumb of continuing to trade until I give back 50% makes sense. However, on a day where, for whatever reason, maybe I'm a bit more emotionally fueled, I have a shorter fuse, even giving back 50% feels triggering. And that's what happened today. So today I was up $11,000, and then in one trade I gave back 5,300, which gave back half my day in one trade. And I was frustrated. I really was. I was like, gosh darn it. Man, that was so quick. I shouldn't have taken that trade. I can't believe it. And I'll get into the details of that specific trade and the stocks, the two stocks I bought and traded today in a moment. But the fact is, I'm still up above my daily goal. And so the lesson here from last week is that this is the place to walk away, right? Right where I'm up only half, once I've given back half. So this is where I'm at today. All right, let me get another color. So today, I'm right here. And so based on my lesson and reminder, every loss can be a lesson. This lesson and loss from last week reminded me that I need to have the discipline to stop right here. Now, ideally, maybe I should move this up, to 25%. So if I give back 25% of my goal after crossing my goal, 25% of my day, that at that point I walk away. That would be a little tighter, but it wouldn't be bad. The only thing is there's probably days where I've given back, a quarter or maybe a little bit more. And then, the market sets up and then there's a couple more opportunities and I end up continuing back up. So the goal is to maximize profit and minimize drawdown. And also to keep yourself at all times in a place where you're emotionally centered. Now, this is a really important one, because a trader who's emotionally centered, who's calm, cool, collected, is going to be a trader who makes more money because they're making better decisions. So if you start incurring these really big losses, you start going on the emotional roller coaster of having, maybe big wins, but then big losses, and you're just all over the place, you're going to be trading erratically. You're going to be swinging really hard with big share size, and that's going to start to get you off your center, and eventually that'll catch up to you. In a hot market, you might get quick recoveries and this and that, but long term, it's not sustainable, and it's very stressful. So it's so much better if you can bring things down and focus on consistency. And before we go over the trades from today, I'll just highlight here my equity curve for the last 90 days or so. It's not without losses, right? So I do have losses. They happen from time to time, but the goal is that the equity curve continues to be in this upward trend. In fact, if we went to detailed and then we jump over here to win-loss expectation, you can see that this is my equity curve for the year as of right now. So, I had a little bit of a bigger drawdown there, but generally speaking, the account continues to grow. That's what it's all about. So having an account where I've made over $10 million and this year my biggest drawdown is $22,000, that to me is good risk management, and it keeps me pretty much at the top of my game, at least emotionally, at all times. So now let's look a little bit more specifically at today's trades to help you kind of understand my thinking and why at this point I feel it's the right move to walk away and call it a day. And one more thing that I'd like to add, something that is really important, especially for beginner traders, is recognizing that there are going to be days that you are just super, super strong from the beginning and everything is firing on all cylinders. And then there's days where, for whatever reason, even though the setups look good, they just don't play out well. And when the market is choppy like that, I just want to sort of steer clear and get out as quickly as I can. Once I get out, once I say I'm done for the day, or if you remember the lessons from last week, I do not want to keep checking the market on my phone. Because if I do that, what good is going to come of it? None. I'm only going to get FOMO. If I see that the stock that I traded, if I saw the stock that I lost $5,000 on was back to up way past my entry, I would be very annoyed. So the stock that I lost on was TPST. We can look at that trade first. And on this one, this was a stock where I took an entry at $8.90. Wow. And it was right before that big red candle, one of the biggest red candles of the day. A poorly timed entry, you could certainly say that. What I was looking at the time was the stock had just made this really big move up, as we could see right here. And it was consolidating, and so I punched it not 3 seconds before this red candle formed right there. It was just almost the worst possible timing. But I got in right here. I saw this as a micro pullback, and I was looking for the break through 9. Now, this is an example of a chart and a trade where I was trading using level 2, and I was also using the 10-second time frame. And that might have gotten me into a little bit of tunnel vision, because when I step back and look at the 1 minute chart, I do sort of I see more clearly that I was buying a stock that already had 4 green candles in a row and was obviously extended. Doesn't seem like a great entry. I suppose in my defense, one of the other things I was looking at was that if this broke over, I think it was approximately $9, we had quite a bit of room on the daily back up towards 11. So I was looking at some of these recent levels up in here, but in any case, it was a bad trade, and it was a quick loss. I got in and instantly, biggest red candle of the day forms. So, it was the right move to sell. If I had kept holding that position, well, I would only be deeper in the red right now. So it was the right move to sell. Had this come back up and gone through 10 and 11 and 12, that's the spot where if I had seen it, I would have felt FOMO and frustration, and I might have tried to overcompensate for my loss and get back into higher price with an even bigger position. And if that had gone wrong, just like that, that's how you swing from green to red. So really the right move once you decide to walk is not to look at anything for the rest of the day. And it's crazy how much of a tunnel we can get into with our thinking, where on a day like today, a trader could be upset, and I could be upset, and I am a little upset because I gave back half my profit. And no longer am I grateful for the profit I have, the very real $5,600 that I have, that's more than I had at the beginning of the day. My mind is thinking about what I lost. Now you can say, oh, Ross, you're so dumb. You should just be grateful, blah, 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 blah. But for those of you who've been trading for a while, you know that this is the trap in thinking that many of us fall into. And this is one of the reasons that trading is so hard, because, objectively, gosh, it's still a great day. But when you're in it, you're constantly dealing with the emotion of loss. So in terms of some of the rules that I would encourage following, and that I'm trying, as always, to follow in my own trading, number one is if I give back 50% of my profit, walk away. But I found that that's not quite enough. I also have to seriously stop watching the action. Because if I continue watching, the more I watch, the more emotionally activated I become, the more I feel FOMO, and the more tempted I am to come back and try to get a piece of this action to recoup what I've lost, right? And so really, out of sight, out of mind truly is the best in this case. Just, it's very hard. You have to have the discipline. It's as simple as that. You have to have the willpower to say, I will not look at charts until tomorrow morning, or until after the market's closed, 8 p.m. if you want to do evening research. But I will not look at it while the market's still open, because I do not trust myself. And I know from prior experience that I will give in to FOMO, because after all, I am only human. So the more I tempt myself, the worse it'll get. So this was the loss that I had on TPST. Yeah, like I said, I can see how I got a little tunnel vision and jumped in that a little too quickly. However, there were a couple of things about TPST that I did like. So TPST is a stock that has a 7.5 million share IPO. Float. If we look right here, it was already up 10% on the day. The relative volume today is 2.78, so it's actually a little low. This is true, and this is very common when we're doing a daily continuation setup. The daily volume is low because it had such high volume the other day, right? It's not like low in total, but relative volume is lower. So that was a little bit of a risk factor. The price was fine, though. It was priced between 2 and 20. And you could see, by the way, this is the daily chart where we're looking at the volume being a little lighter. All right, so volume. So what I'm looking at is down here, these volume bars being a little bit smaller. So the high volume was on this day right here. And then we've got light volume, red candle, light volume, red candle. More volume came in, but in any case, our relative volume right here is 2.78. Float is 7.5 million shares. Today, it's up, let's see, right now, TPST is up 5%. It's pulled back a little bit. So at the peak, it was up a little 10-15% maybe. It wasn't up a ton, but it was up more. And the float was right. In the news catalyst on this, this is unfortunately one of those stocks. It's really a continuation setup. I have a whole scanner dedicated to trading continuation. I like continuation, but we can have this issue where continuation trades can be a little less reliable than first day breakout. However, the stock that I made the majority of my profit on today, SPRC. All right, so SPRC, I got to link these two together. All right, so SPRC, this one, we're going to switch to, well, we'll look at the daily first. So SPRC, I was a little unsure about because it has this daily chart where it has a history of red candles here, here, and back here. So because of those red candles, I was a little bit worried. However, it's a recent reverse split, as you can see right here. Right there's the recent reverse split. So this was a big reverse split, 26-1. And this morning it started squeezing up. So I was like, okay, I'm going to go ahead and jump in it. All right, so hang on one second. All right, so we're going to switch to our 5-minute chart on this. This was the trade that I took. Stock is squeezing up. At the time, it was our leading percentage gainer in the entire market. And the trade that I took on it was right over this level here of 686. As that broke, I was trading this move here for $11,000 of profit. So that was a pretty nice move from $6.86 all the way up to just under $9 to $8.86. That's $2 a share. $2 a share certainly pays the bills. But after it pulled back right here, I said I'm no longer interested. And the reason was this was a nice step up, nice pullback, but right here on this green doji candle, it did not break through 9. I want to see a break through 9 and then see a pullback over 9 for the next leg up. So what ended up happening on this was it pulled back a little too much. It didn't go up high enough, then it pulled back too much. And so at the open, I was like, this is no longer a strong, stair stepping up pattern. This is now starting, I feel, to step back down. And that's when we get that head and shoulders pattern. So that's the shoulder, that's the other shoulder, and this guy's just got a really skinny head right here. He's like, hello? And that's it. So that was the end of that one for the day. We got some good action in this range, right in here, and I traded it right in here, and that was it. Today was a day where I was green pre-market, and then at the open, I ended up giving back profit. There's other days where I'm red pre-market, then at the open, we get some really good opportunities, but recently pre-market has been fairly strong. So kind of a bummer that I did give back that profit today. But again, going back to the rule of thumb, number one, giving back 50% of profit, time to walk away. And number two, stop watching. So this is the thing where I wasn't even sure I was going to record a recap because I was like, I really need to not watch at all. But I thought, let's just record it quickly and then be done. So here's my recap of today's trades, and I hope you found this interesting. As always, hit the thumbs up if you did, and I'll put a link to an episode YouTube Things You'll Love right here and another one of my recent uploads right there. And I'll see you for the next one real soon.